Greetings to our respected lecturer Dr. Logaswati. My name is Yamni and metric number 272372. Today we are from Group 10 would like to present on CIMB Local Commercial Bank and Citibank as International Commercial Bank as for our group project. I would like to do a short introduction on CIMB Commercial Bank. CIMB is known as a leading Asian universal and financial advisor in country. It is the Asia's fifth largest banking group by assets with 34,000 employees and 16 million customers as the record of December 2020. The services that they are offering is wealth management, investment banking, Islamic banking, merchant and commercial banking. Besides that, from a study shows CIMB has a total assets of 602.4 billion ringgit for overall shareholders collection of 55.9 billion ringgit and a sum of Islamic capital 143 ringgit billion. There are 5 divisions in CIMB Bank, which are commercial banking, investment banking, consumer finance, wholesale banking, support and other services. Leading Asian corporation and organizational goal is to have universal banking services as a strong, instituted and organized institution. I will continue on Citibank introduction. In year 1812, at USA established as Citibank of New York, it is the first national Citibank of New York. Citibank have in 723 locations, especially at 6 largest cities in USA such as Washington, D.C., San Francisco, Chicago, Miami, New York City and Los Angeles. The headquarters in Malaysia is at Jalan Ampang, Kuala Lumpur with 6,000 employees across 11 branches in Penang, Johor, Selangor, Melaka, Kuantan and KL. Citibank at Malaysia is known as leading in foreign banking and also operating financial service at Labuan. They offer cash and variety of banking services. Next, I will pass to my team members to continue on this presentation.
Good day everyone. First, let me introduce myself. My name is Nazira binti Asri and metric number 269520. Okay, for the next formula is net non-performing asset. Gross NPA minus provision divide loan times 100. For the next formula is capital adequacy ratio equal tier 1 capital plus tier 2 capital divide risk-weighted asset times 100. For formula credit to deposit ratio is loan divide deposit times 100. For debt ratio equals to total liability divide total asset times 100. And net interest margin equals interest income minus interest expense divide average earning asset times 100. Last one, loan to asset ratio equals to loan divide total asset times 100. Now let's look at the CIMB financial ratio. The liquidity ratio consists of 2 ratios, which is current ratio and quick ratio. Because inventory is not included in a bank financial statement, the percentage for both ratios are the same. As a result, the inventory is not included in the quick ratio calculation. In 2015, the percentage is 6.72, increased and reached the highest percentage in 2017, which is 7.17. After that, it declined to 6.48 in 2019. Next, profitability ratio. For gross margin, CIMB Bank experienced negative ratio from 2015 until 2019. And for return on asset, for all years, the ratio is under 1 except in 2016, which is 1.1. Next, for return on equity ratio, the highest percentage is 10.77 in 2016 and keep declining until 2019, which is 6.86. Okay, for gross non-performing asset, the highest percentage is in 2017, which is 3.47, and the lowest is in 2016 with 2.99. Okay, next, net non-performing asset. The percentage decreased in 2016 and then rise to the maximum level in 2017. After that, it continued to fall until 2019 and become 0.48. Okay, for next, capital adequacy ratio. The highest is in 2016, 18.35 and decreased to 15.82 in 2019. For credit deposit in 2017, the percentage fell from 86.62% to 85.96%. Following that, it rose in 2018, but then fall again in 2019. Next, the debt management ratio consists of 3 ratios, which is debt ratio, net interest margin, and loan to asset ratio. For debt ratio, the percentage increased from 2015 89.97 to 90.8986 in 2019. For net interest margin, the highest is 2.11 in 2017 and the lowest is in 1.99. Okay, the last ratio is the loan to asset ratio. In 2016, the percentage increased but then decreased in 2017 and it reached the highest percentage in 2018. Following that, it fell to 62.89 in 2019.
My name is Putri Nur Amira binti Muhammad Atas and my matrix number is 271911. So now, I will tell you the formula of the ratio that we use. The first ratio that we use is current ratio. The current ratio is equal to current asset divided by a current liability, while for quick ratio is equal to current asset minus inventory divided by a current liability. Next is gross profit margin is equal to revenue minus cost of goods sold divided by a revenue. Next is return on asset. Return on asset is equal to net income divided by a total asset. And for return on equity is equal to net income divided by a total equity. While for gross non-performing asset is equal to gross non-performing asset divided by loans. This is a financial ratio for the Citibank Berhad. The first ratio that we calculate is current ratio and the quick ratio. As we can see, the current ratio and the quick ratio for the Citibank is the same. So, from 2015 to 2018, the ratio has declined from 1.14 to 1.10, while in 2019, it increased to 1.11. Next is the gross profit margin. The ratio has shown the increasing in 2015 to 2018, which is from 0.80 to 0.83. But while in 2019, the ratio has decreased to 0.82. While for return on asset, the ratio has shown the decreasing from 2015 to 2018, which is from 2.15 to 1.41, but it's increased to 1.46 in 2019. Next is a return on equity. The ratio has decreased from 2015 to 2016, which is from 15.68 to 15.55. But in 2017, it increased to 15.67. In 2018, it decreased to 13.26 and also decreased in 2019, which is 12.58. The next ratio is gross non-performing asset. The ratio has shown the increasing from 2015 to 2017, which is from 0.91 to 2.36, but it decreased in 2018, which is 2.17, and increased again in 2019, which is 2.20. As for net non-performing asset, the ratio has shown the increasing from 2015 to 2019, which is from 0.71 to 1.48. Next is a capital adequacy ratio. The ratio has shown the decreasing from 2015 to 2016, which is from 19.10 to 18.90. But in 2017, it increased to 19.14. But in 2018 and 2019, it decreased, which is from 17.08 to 15.27. While for the credit to deposit ratio, the ratio has shown the decreasing from 2015 to 2019, which is from 76.80 to 75.30. Next is the debt ratio. Debt ratio has shown an increasing from 2015 to 2018, which is from 86.27 to 89.34. But in 2019, it decreased to 88.38. Next ratio is a net interest margin. The ratio has showed the increasing from 2015 to 2016, which is 3.04 to 3.14, but it decreased to 2018, which is 2.79. But in 2019, it increased to 2.86. The last ratio is a loan to asset ratio. The ratio has showed a decreasing from 2015 to 2018, which is from 62.33 to 56.03. But in 2019, it increased to 61.42.
Hello, my name is Fahmi Majdan, matric 272631, and I will analyze financial ratio for Citibank in 5 years time frame. The first one is the current ratio. For the current ratio, it shows an amazing increasement from 2016 to 2019 and remain unchanged for these 2 years at 1.13. In 2019, at 1.14. Which means the bank is performing well in 5 current years. When the ratio is 1 and above, is considered company is in good financial position, and current ratio of 2, it means it can easily settle cash on each loan or account payable twice. Next is the quick ratio. The quick ratio has the same amount, same ratio and same trend for those 5 years. In 2016 and 2019, the ratio is 1.14, which means it can pay the current liabilities 1.14 times over using most liquid asset. Ratio 1 above 1 indicate the business has enough cash or cash equivalent to cover its short-term financial obligation and sustain its operation. Next one is gross margin ratio. The gross margin ratio 2019 is at 0.8%. It means every 1 ringgit, the profit is 0.8%. The highest for Citibank in its current 5 year is 0.83, while the lowest is 0.8 in 2019. Next one is return on asset ratio. Return on asset have been increasing dramatically from 2016 to 2017, and then it continue to increase until 2019 at 2.14. It shows the more productive and efficient the management in utilizing the economic resource of the company. Next one is a return on equity. The return in equity has also had the same trend that has been increased dramatically from 2016 to 2017, and then it decreased in 2018 and increased once again in 2019. Return on equity signifies how good the bank is in generating return on investment or it received from the shareholder. The next one is gross non-performing asset ratio. And non-performing asset is a term used by the credit institution to refer to the sum of the non-performing loan less provision for bad and doubtful debt. The credit institution tend to provide the precautionary amount to cover the unpaid debt. Therefore, it deduct provision for unpaid debt from the unpaid debt. The resulting amount referred to the net non-performing asset. The highest is in 2017 at 1.86 and the lowest is 2019 at 0.71. It will be increasing from 2015 to 2017 and dramatically decreased in 2018. Next one is capital adequacy ratio. In 2015, it start with 15.27 and increased until 2017. Decreased again in 2018 and increased at 19.10 at 2019. That further a good capital ratio has enough capital to cover potential loss. Thus, less risk becoming insolvent and losing depositor money. Next one is credit to deposit ratio. In 2016, it's been the lowest at 67.14 and the highest is 79.80 in 2019. Next one is debt ratio. The debt ratio has been decreasing from 2017 to 2019 at 86.27. Here, the ratio, the greater the degree of leverage and the financial risk. The debt to asset ratio is usually utilized by the creditor to determine the amount of debt in a company, the flexibility or capability to repay its debt, and whatever additional loan are extended to the company. On the opposite hand, the investor use the ratio to make sure the company is solvent is in position to fulfill the current future obligation and might generate a return on their investment. The last one is net interest margin. The net interest margin had been start at 2015, decreased in 2016, and increased at 3.08 in 2017, and increased again at 2018, and decreased at the end of 2019 at 3.04. The net interest margin is a measurement tool used by the company to compare the net interest income of financial firms generate from credit products like loan and mortgages. In easy terms, the positive net interest margin suggests the bank operates profitably, while negative figure implies investment inefficiency within the scenario.
Hi everyone, my name is Wong Chong Ming. Number metric is 261339. I'm going to analyze the financial ratio along the 5-year of the CIMB Bank. First, for the current ratio, it has shown an increase in 2017 because due to the reason of the CIMB Bank have grown the quickest in the Malaysia in mortgage, personal loans and credit card loans because they have improved their data analysis and mining, allow them to get better target of customer. For the next is credit ratio. Credit ratio has also show the same increase in 2017 due to the reason of the CIMB Bank has maintained a conservative asset liability management approach aimed at achieving a stable financing structure by lowering the reliance on the shorter term deposit product. For the gross margin also show an increase in 2017 due to the reason of the revenue of CIMB Bank have grown and CIMB have enhanced its cost control, but it's faced some issue in its profit of bank in 2019 due to the reason of increasing in operational expenses as the CIMB Bank incurred the increased personal transformational expenses in Malaysia and Indonesia throughout the years. For the next is return of equity. For the return of equity, it has shown an increase in 2018 due to the reason of the CIMB Bank profitability by demonstrating how much profit is earned with the money shareholders has invested. This is because the higher wealth management and the banker assurance income were offset. Okay. For the next is capital adequacy. For capital adequacy, okay, in 2016, okay, due to the reason of the corporate banking has rose as a result of loan growth and the decrease in the corporate provisions. Okay, but in the 2019, due to the reason of additional of credit made from the CIMB Bank, CIMB Niaga income increased by 2.1% years on years to 4,954 billions, owning the greatest cost management and the largest loan provisions. For debt ratio has shown a steady decrease, but is steady increase throughout the years. But in 2016, it has shown the asset quality is the top concern, with the risk management and the compliance playing the critical roles in maintaining high level of analysis. Okay, for the 2019, it show a lower of debt ratio has considered better for the CIMB Bank because it's very effective whenever the CIMB Bank manage its own risk wisely due to enhanced capital markets, treasury markets, trading income, and a higher wealth management revenue. For the net interest margin, has shown and decrease in 2017 due to the reason of driven by the loan and credit growth, but it show and decrease in 2019 due to the higher wealth management and bank assurance income were offset. For the loan to assets is increased a little bit to in 2016 due to the domestic focus was mostly on the ringgit ongoing depreciation and unpredictable commodity price. Okay, for in 2019 due to the reason of Malaysia economy was wealth and which is have the GDP grow and the stronger ringgit throughout the years. But for the last is the return on asset. Return on asset, it has shown an increase in 2016 due to the reason of Malaysia economy was reverse in 2016 with a strong GDP growth and the strengthened ringgit through the years. But it also decreased in 2019.
Hi, my name is Nurul Nadia Betty Yusof and my metric number 269707. So now I would like to present about financial strategy. For financial strategy, we also using a financial SWOT analysis to evaluate the strength, weakness, opportunities and threat for our chosen bank. Firstly, the strength of our chosen bank, which is Citibank, is have a high profitability ratio. It indicates Citibank was generate profit very efficiently and value for shareholders. Then, the product or service with the highest gross profit margin is the most important for a bank. Once a bank has identified its most profitable product or service, they should focus on this. They need to determine whether the unprofitable product or service should be fully removed or reviewed for improvement. So, this is one of the ways that Citibank need to maintain their good profitability ratio. Secondly, the weaknesses of our chosen bank, which is CIMB Bank, was have a negative gross profit margin. This is because of declining sales, poor marketing, increased competition, and so on. Thirdly, the opportunities toward the weaknesses is CIMB Bank need do something to reduce their gross profit margin. CIMB Bank should make a lower price to generate sales in order to reduce gross profit margin. Some banks offer discounts and promotions to attract customers on a regular basis. While bank may get sales, large price cuts reduce the gross profit that they make. Lastly, the threats of our chosen bank is based on the current situation, which is pandemic COVID-19. It was gives a bad impact to banking sector. CIMB Bank and Citibank was facing the drop of bank sales and also they need to face more competition with other banks. This is because every bank was fight to get the good potential bank in this country after declining effect of COVID-19 pandemic. Now the part of recommendation. Firstly, the impact cost of proliferation of technology trends. CIMB Bank take a push by strengthening the resiliency of their system. Other than that, deploy data analytics and capabilities to be a data-first organization. And lastly, apply comprehensive data governance, including data origination, access, and so on. Then, CIMB Bank also take a push cost of impact to new competitor trends. They monitor new competitors' developments and update their offerings accordingly. Next, they build a beyond banking proposition for future value capture to the group by being both a participant and owner of ecosystems. The last recommendation is improve credit management. The cash flows of many consumers and business will collapse as lack of demand flows into business income and lower layoffs. This in turn will lead to an increase in commercial and retail non-performing loans, as borrowers struggle to match scheduled interest and principal payments. However, steps can be taken by banks to reduce this, which is by initiate credit tolerance programs and reforms, digitize to manage refinancing requests, and so on. So, that's all from me. Thank you.
In the conclusion, financial ratio help in the comparison of two banks, which is CIMB and Citibank, in determine the bank liquidity as well as its long-term solvency. It help in analyze how effective and efficient CIMB and Citibank operation by performing trend analysis. A financial strategy help a bank to examine its financial needs and the resources necessary to support and reach their objective. Financial SWOT analysis was used in this financial strategy to examine the strength, weakness, opportunity, and threat in CIMB and Citibank. Next, there are a lot of factors that affect the bank performing trend and bank operation activity. Bank performance affected by slower economic development, continued global trade tension, currency duration, and margin pressure from interest rate decrease in most operational countries. This poor operating environment was shown in decreasing consumer confidence and a slowing of economic activity. Monetary policy uncertainty caused larger swing in regional currency during the year is a challenge in banking industry in Malaysia. As a result, the banking industry must respond immediately to resolve existing issues in order to improve its performance, and the financial industry has been exposed to immediate pressure as a result of COVID-19. So banks are under pressure to help their customer while also being concerned about the rise in non-performing loan (NPL), which will lead to capital loss. However, banks must continue to play an important role in defining the recovery and assisting their customer in rebuilding their financial stability and health. Thank you.